Jones right now. Brian Levitt at the table, Invesco's chief global market strategist. We're going to be hearing from a whole bunch of Fed officials later today. I imagine they may talk Jay Powell. We can do that too, but they're probably going to talk about where they think the economy is going. You layer on the bank earnings, and we'll make you a Fed official for the morning. If you're the Fed speaker, what do you think is happening here?
Well, I think the Federal Reserve, I think we're in a good place because the Federal Reserve has already set up the market for interest rates to move to 3% by the end of the year. So all of this jawboning and all of this concern about the legalities with regards to the Fed, the market seems mostly willing to look past it right now, not because Fed independence isn't critical, but because we've largely set up the market to be prepared for a series of rate cuts this year.
So you think a lot of the hair on fire stuff in terms of market and Fed independence should be related, unrelated? What is your actual take on that?
Well, it should be very related. I mean, I think the big risk to the outlook is that if the market starts to get a sense that Fed independence is going away, you'll see what you saw Sunday into Monday, which is a rise in inflation expectations. If longer rates start to go up, valuations need to adjust. So that is critical. I think where the market is right now is believing that there's pushback against it. The market is already set up for rates to go lower. So we're in a moment right now where the market believes, I sense, that we're not losing Fed independence.
What happens if Kevin Hassett becomes the Fed chair? Do you think that is Fed independence?
Well, we have seen people come from administrations to run the Fed, not directly. We'll have to see how Hassett acts in that role. Again, the good news is rates are already expected to go lower. What I'm telling investors is watch inflation expectations closely. In every cycle, we maniacally watch something new. I think the 3-year break-evens are telling you what you need to know. They were moving lower in an environment where the economy was likely to pick up, all a good sign. They moved higher a bit, not a bit, they moved higher, probably in the 240 range on Monday. If that starts to break out, that's a problem. If that stays in that 2.25, 2.5 range, then we're in a good spot for markets.
I just make it's a tangent of a comment.
Yeah.
One of the reasons, I think everyone talks about Fed independence in the context of, are they going to raise interest rates or lower interest rates? What does the market think in this moment? Yeah. That's not why Fed independence, I think, actually matters. It matters, actually, when you have a problem, when you have a panic, when you have a crisis. Because in those moments, typically, the Federal Reserve has had to do things that are completely politically unpopular, unpalatable, things that nobody wants them to do. And I don't know if the market fully appreciates that piece of it. Meaning, when something terrible happens, if you don't have an independent Fed, you may have choices made that actually are demonstrably a problem.
You don't think it's easy to open up the spigots and flood the markets with liquidity? I think any central banker that's worth a salt can debase.
Sure, and in some cases, the answer might actually be what Paul Volcker did, which was also politically unpopular. My point is,
I thought you were talking about like 2008.
Yeah, well, I think 2008 is an example of something that was politically unpopular in terms of
2020 as well.
In terms of opening up the spigots on one end, and then on the other end, you could think of a Paul Volcker scenario. My only point is that when there are acute moments,
when the going gets tough,
gets tough, there are going to be decisions that typically have to get made that are terrible.
Usually, it's lowering rates and flooding.
Well, in some cases,
this would be he'd be the perfect guy.
Could go either way, but the broader point is that
for inflation, there's no doubt.
You want somebody in that role, and you want an institution in that role that isn't necessarily beholden to some politician.
You know what you would be?
You're
criticizing Jay Powell, and that's where the political criticism of him comes in for not raising rates back when he should have. You wanted someone there who wasn't going to keep rates low to help the Biden administration.
I understand.
He was going to raise rates.
I understand the argument that he's making.
I don't think he was kowtowing to an administration.
A lot of people, his critics say he was.
A lot of what American exceptionalism was all about and the strong U.S. dollar were those responses to the last two crises, right? The United States did respond faster in 2008 and 2020 than the rest of the world. What we have now is a bit of a different environment. You have other central banks around the world that have already eased, and now you have a Federal Reserve that's going to be easing rate. We haven't seen this in a long time, a gradual reduction in rates towards the rest of the world. It means weaker dollar. right? It doesn't mean a collapse in the dollar. It means for the first time in a while, we're in an environment where you open up opportunities for investors to do well outside of the United States.
The crisis Volcker faced was like the frog as the water keeps getting hotter and hotter and hotter.
Sure.
It wasn't just like something that happened in 3 weeks or a month. But that is the true backbone of a Fed chair.
And the reason why I'm watching the inflation expectations so closely, I mean, you could have looked at it in 2022 as well. As soon as the 3-year started to break above 2.5% and started rocketing above 3, that's where you got a pretty significant sell-off in markets. That's where the Fed was behind the curve. In this instance right now, again, on Monday, we moved from, call it 2.25 to 240. That's a pretty big move. I would still categorize it as price stability.
But the 3 years what you're watching, we barely pay attention. 3 years what you're watching?
Yeah, 3, 5. I mean, they're kind of been moving generally in unison. Everything jumped about the same amount, 1, 3, and 5. I'm just looking at 3 because, you know, we're dealing with tariffs. We're waiting to see what the impact of that is, and it's been very benign up until Monday morning.